And good morning, everyone, and welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, prop firm trading, building expert advisors for the MetaTrader 4, MetaTrader 5 platform, and just in general, helping you become a better trader by helping me become a better trader. I've been the Forex game for a long time, on and off for about 25 years, but it's I've kind of stuck my big toe in it this time, stuck my whole foot in it this time about a year ago, and started building the channel out, as well as building out a lot of other things to help you become a better trader. And first help me become a better trader, then I'll share my experience with you and help you become a better trader in the meantime. So with that, let's go ahead and get into the risk disclosure section. Since we were talking about risk disclosure, we're talking about putting money at risk, so we should probably talk about that. First, let's don't forget to hit the thumbs up button if you like this video, and go ahead and subscribe if you like the channel, and we'll go ahead and go further. And of course, I'm going to keep making videos, but then you can be notified of when I put out new videos. So with that, let's get into the what you need to know about risks. First, this channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration. I have held NFA registration in the past, many years ago. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade with funds you can comfortably afford to lose. And here's the CFTC risk disclosure. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. So with that, let's go ahead and get into what we're going to be talking about today. First, here's tradingforexforprofit.com. This is my site that I'm building out. It's call it about halfway there. But here you can go ahead and get started on it if you like. Go ahead and come into a free account here, and start with one account. You can set up your basic risk calculator and your basic trade journal, and then work with the workflow tools. Then after you play with that for a little while, come into the pro section and add more accounts, because I have multiple accounts, and in my opinion, you should too. My opinion, by the way, not trading advice. You can also set up your prop firm challenge tracking, check out full analytics, and has an advisory system too. And then we have the premium section for everything in Pro, and then plus you get premium news, scheduled news of tools, and advanced analytics and archives. We're still building out some of those, so we're not openly saying you should jump into the premium yet. But you know, hey, we're getting there. With that, we also have here's Forex.com's risk warning too. I just want to show you what this means right here, and also this part here. For the calendar year ending March 31st, 2026, there are 38,585 active non-discretionary trading accounts, of which 30% were profitable. Now that's the goal here, is to get to that 30% that were profitable, and not the 69.09% that were unprofitable. So that is the goal there. That's what we've been working. That's what I've been working on for a long time. Let me see. With that, let's go ahead and get into my other products. Here we have the mean reversion, the Bollinger Band and RSI Mean Reversion Pro for MetaTrader 4 and MetaTrader 5. I'll be putting out videos on these soon, showing why you should buy these videos and use them in your trading. They are very good. They don't trade as often as I would like for them to, but we are definitely working on that. I'm fine-tuning them and making them better. So with that, let's go ahead and get into what happened with the markets yesterday, for starters. Or not yesterday, but Friday. Friday, a big event happened. Oh no. Iran launches salvo of missiles at Bahrain. Kuwait. Well, that's not good. Let me see, what have we got going on here? So with that, that's not necessarily good news, but we do have to come back here to Friday's news. Unemployment change, and look, everybody's getting jobs in Canada. How about that? Unemployment rate plummeted in Canada. How about that? 6.6%. Interesting. We also have the hourly earnings rate that did not keep up with inflation at 0.3%. That's what the negative of the jobs report was. However, the unemployment rate held the same, but the economy created 172,000 jobs versus they were looking for 185. So that, and this was revised up as also. So we've had 2 months of revisions up to over 170,000 jobs created per month. That is good for the economy. That is also good for the small business sector. Now, whether or not that works for us or not, I don't know yet. Let's have a look. Session disconnected. Nope, we want the session connected. Here we go. My other machine was turned on. But here is the what we have going on here with the, oh, wait a minute. This is the weekly jobs, or the weekly look back or look ahead. So we need to look at the weekly charts, not the other charts. So we're going to come back over here, and we are also going to take a weekly look ahead here and go down to here. And this week, applied settings. Let's see what's going on here this week. So this week we've got a whole lot of stuff going on. OPEC meetings all day. The OPEC has really been watered down lately, so we'll see if they hold up on that. Japanese current account and GDP is coming out next. After that, not a whole lot of news for Monday. Not unusual. Not a whole lot of news for Tuesday. Not unusual. So Wednesday we have core CPI, and then the Canadian rate statement. So the Canadians are going to be taking a look at their rate. They're expected to hold at 2.25. And then we have the euro. What am I looking for here? I don't see it. We have the euro rate. They're expected to raise rates to 2.4%. So we should be able to see a little bump up in the euro versus the dollar, maybe. And then core PPI, which also inflation. We'll see how inflation is working with the dollar. And then we have the press conference, the presser for the euro from the ECB. British GDP coming out Friday, and that wraps it up, along with University of Consumer Sentiment. And for some reason the consumer's been unhappy lately probably because gas prices. That's the number one place they're going to get hit first. So that's not necessarily a good thing. I'm going to be bouncing back and forth between the dailies and the weeklies on this too. So with the daily chart, let's look and see what happens, because a weekly really doesn't give the full effect of what happened. Well, yeah, it does. Never mind. We'll keep it here. On this past week, we had a big surge in interest rates in the U.S. The U.S. 10 years up to or the bond yield is up to 4.5%. Interest rates have not gone there yet. Give me just a second. Okay, so interest rates have not gone there yet because they haven't changed interest rates yet. Japanese 10-year, I always like to look at this and see what's happening. Japanese big pullback in the Japanese 10-year bond for the week. Looks like that's forming a almost a pin candle, which is a very strong indication of a turnaround. We'll see if that actually happens or not. We'll come down here to the euro versus the pound, and the pound has been winning this week, but as you can see, they're kind of trapped right here between these two for the last 2 weeks. The euro versus the yen. It keeps going, just a big tug of war going back and forth, almost equidistant candles. So not a whole lot happening there. DXY, big surge in the DXY thanks to the jobs report. Pushes it up over 100. It's the first time we've seen that, and broke out of this range down here, but it does enter a second weekly range. We'll see if it can break 110.5. Breaks 110.5 and breaks 110.92. We could be looking at a lot of inflation coming back in the market like it was back here in 2022. This was a very inflationary cycle and deflationary cycle as soon as the Fed started raising interest rates. Which is not in their best interest, because the government has a lot of debt, and that debt, when you increase the debt, then that increases the debt service on that debt. So it's not in the Fed's best interest to raise interest rates, but they may have to anyway to save the economy. So now the government has spent us into a corner where so they're either going to sacrifice the government or the consumer. So not a very happy outlook, but that's what is essentially what the Federal Reserve Bank has done, as well as other central banks around the world, ever since COVID. Let me see. Euro versus the dollar, 115.22. Big drop on Friday, thanks to the jobs report also. So there's also the big reason the jobs report is a concern is because of this. because now there's a possibility that they're going to raise interest rates. Now, a 170 jobs report is not an indication to raise interest rates to me. That's just an indication of a healthy economy, if you ask me, because we're supposed to be entrepreneurial. All money does not come from the government. It comes from small business and business creation. Unfortunately, that's not the way the world sees things. And the current talking point is that all money comes from the government. And therefore, they should raise interest rates if people start creating too many jobs from businesses. And that is the main talking point, especially from the media. However, we're still looking at a 4.6% chance of a Fed cut and a 95.4% chance of not doing anything at the next meeting, which is June 17th. Yeah, let's see if we still have this priced in. Yeah, we're still expecting Fed cuts. One in December, hold in October, hold in September, and hold in July. So that's still what we're expecting. Whether or not that happens or not is something completely different. But that's the whole reason that the jobs report may have been the jobs market did rattle the markets a little bit on Friday. But again, looking at the weeklies, they didn't tear up anything too bad. It's the euro, the pound versus the euro is right. Pardon me, pound versus the dollar is still right in that little range that it's been in for the last 3-4 weeks. It's not going anywhere. Dollar versus the Swissy, again, big surge of the dollar versus the Swissy, but nothing's really changed dramatically. So it's we're still dealing with the same economy we had. So aside what the media is going to tell you, there's not really anything different than what's been going on lately. Dollar versus except this, the dollar versus the yen is up to 160.32. The last time we had an intervention was way back here on July 2024. A meaningful intervention, we'll call it. And that was 1 July 2024, and that dropped it down 500 pips. So that's what we're going to be looking at soon. The Bank of Japan is going to have to intervene with their currency in order to stay afloat, and because their central bank has painted themselves in a corner with a 236 debt to GDP ratio, which clearly is not working out. Which makes me wonder why we in the United States, our congressional leaders, think that, and I'm not both parties, I'm not saying one or the other, think that a 124% debt to GDP ratio is that important. I think they should all be required to spend 124% of their income just to get an idea of where we're going. But that they're, I wonder how we do that. Oh well, pound versus the yen. Pound versus the yen, big drop here, 97 pips on Friday, came down to about 213.88. Still not a big drop. Still not a fantastic drop. Nothing we should be overly concerned about. Euro versus the yen, 112 pips. Not too bad either. Now let's get a look at the Canadian crosses. Canadian, look at that. Broke out of the pitchfork finally. So we're finally invalidating this pitchfork scenario here and getting into a flat range, which is much easier to trade than a pitchfork. So we're going to see if this holds, or if it starts breaking down as it approaches the May 2025 weekly high close. Canadian versus the yen, about 60. Not much at all. The oil market must be holding that up a little bit more. 115, right? 115 spot, as James Stanley would say. He's on vacation somewhere. I think he may have had a child. But at any rate, we also have the the crude oil, NYMEX crude oil at 90.54. Maybe not. 90.54 taking place here. We're going to see if that's is going to hold. We'd like to see that come down a little bit more, but that's a big turnaround candle right there, potentially. I don't think it's, it's a big price rejection here at 96. It settles down to 90. If we get continue to get possibly, I don't think the inflation numbers would be affecting the price of crude oil. I think it's the other way around. Crude oil is affecting the inflation numbers. So we'll see what our inflation numbers come out this week as. Aussie versus the dollar, big come down on that one. Look at that, down 91 pips. Again, strong dollar does that. Let's look at gold. Gold is testing its big test here for gold at 43.28. So we'll see if that's going to continue. Platinum, 1797. Big test for that too, well under 2,000. We'll see if that continues. Palladium, down bigly again, 1263. Silver, 67.77. Not my favorite thing to see, but down $6, down almost 8.28% over the past year. Now, also, we're getting into the software sector. What we're running into now is companies like Google, Meta, and some of the bigger AI companies, or yeah, we can call them AI companies, that have been trying to refinance more and more, doing more splits and buying of their stocks to try to inflate their stocks. Well, what happened is a big jobs report is going to indicate a stronger economy, and therefore they might have the possibility of raising interest rates. That breaks all of the fundraising that all these companies are doing right now. Look at the video, down 6.2%. So that's the reason for the big stock drop, is that these guys are all on a different page than a stronger economy allows. So one can argue that our economy is not as strong as we think it is, with all these companies trying to ever more raising more and more money by issuing more and more debt, but they're not seeing the returns on this yet. So with a stronger economy, stronger basic economy, let's say a dozen plumbing shops or blue-collar worker shops, which are not going to be replaced by AI, open up in every community in the United States, you're going to see a strong job growth that has nothing to do with software or AI. So that is going to be a big indication of what happens next. What's going to happen next? I have no idea, and I don't even pretend to. But the software sector kind of got hammered, as well as the entire stock market. Here we go, 1,400 points down on the NASDAQ. That's huge. That's a 4.7% loss. Let's look at that, see what that looks like. Wow, look at that. One could possibly see that this is going to come down even further. But we've been looking for, in my opinion, the stock market's been extremely overvalued for a long time. 700 pips down on the Dow Jones. We could be entering a correction territory. That's down 1.3%. NASDAQ down 20% would be a bear market. But I don't know if it would continue past that. 30,000, 20% of that would be 6,000. Have it down around here. That's still going to be sharply overvalued if you ask me, but then no one ever does. So with that is about all I've got for today. Just want to remind you that if you like this, let's look at Bitcoin real quick. Yeah, Bitcoin took it on the chin too. With the jobs report. It is not rebounding over the weekend like one would think it would. So next stop for Bitcoin is going to be around 45,000. Maybe not that low. Yeah, the next weekly is going to be around 45,000, possibly around 54. That's the first spot I thought. So if it comes down to about 54, we'll see what happens there. Got a strong area of support right here. We'll see if it holds up. But at any rate, that's all I've got for today. If you guys like if you like with this video, then hit the thumbs up button. If you want to see more of these videos, then subscribe to the channel. And lastly, if you want to talk to me directly or yell at me directly, that's fine too. Then hit me up in the comment section. I'll talk with you later.